All right. So we will go ahead and get started. So good morning. I'm Elena Boyd with the UT Center for Profitable Agriculture. Some of you may have been on our first Daring to Learn call last month. This is our second. So our speaker today is going to be Mr. David Bilderback from the UT Center of Farm Management. And I have got a little introduction slide here, and I'll go ahead and let him kind of talk about himself, if he'd like to go ahead and give an introduction.
Hello, how's everybody going? I hope, is the rattling in the background terrible?
I can't hear it. I think you're
You
okay.
can't hear it good because they're building a building right behind me, and they've decided to start drilling over the past 20 minutes.
Uh-oh.
But it'll be okay. So my name is David Bilderback. I work for the Center for Farm Management. I'm a extension farm management specialist. I cover a specific area of basically Knoxville to Chattanooga within East Tennessee. We'll see all that in a minute, but I've worked here for 16 years now doing farm financial management. The best thing I like doing is working one-on-one with farmers and producers.
Awesome. All right. Thank you for that. And I'll go ahead and let you get your slides up. David, I think you're muted if you're meaning to be talking to us.
Yeah, I am. Can you make me a co-host?
Yes.
It wouldn't let me sign in as a co-host. So if you just click on me as a participant, and then there's 3 little buttons next to my name.
There you go.
Okay, now it's going to let me share the screen. All right. Is that working well?
Looks good.
Do one thing right here. And if you have any questions or anything, just let us know as we go. But I'll go ahead and get started. Appreciate you all having me on today. We're going to cover a little bit about what the center does and some other financial information I think is valid and important as we go through everything the center is about. My name's David Bilderback, as was said previously. Been working for UT for 16 years now. Time flies. Seems like just the other day I was heading to Greenville for the first time. I started out in Northeast Tennessee, and then my home area. Grew up in a Dair-ing, Sweetwater, Tennessee, just off I-75. And we'll talk about some of that here in a little bit. Now, if it's going to work. But the Center for Farm Management it was actually started last year. It was sort of a restructuring of our farm management team. We were within the regions across the state, but we added a lot of resources at the state level, and it really made a lot of sense to combine it all. And the purpose of the center is to combine the extension outreach, which is what I'm a major part of, teaching and research. So develop curriculum-based research programs such as Master Farm Manager, deliver through our extension programs, and then the managed team, which we'll talk about out in the field, and we're represented across the state of Tennessee. Then from a teaching standpoint is bringing more opportunity for our students in agriculture economics and getting the undergrads really involved and out in the field. Because a lot of times, as you all know, within the university system. You can go get a degree and you come out and you're like, what, I learned all this stuff. It's wonderful and it's very important, but then how do you apply those things in the real world? So hopefully we're going to give students more opportunity to see how things are applied in the real world. And it'll be an opportunity for students to be involved with research projects and prepare them for the future careers. And then the research, is going to be data-driven solutions for producers. The center is going to be very focused on true production problems and research problems that can be implemented at the farm level once solutions are found. We do have a website you can go to, and it's pretty simple. It's just farmmanagement@tennessee.edu. It breaks out a lot of these programs and that we're going to go into here over the next 40 minutes or so. So here's a basic view of the people. Dr. Charlie Martinez is the center director, and the co-directors are Aaron Smith and Chris Boyer. Aaron is our state row crop economist and with Extension, and Chris is a beef research professor and is just incredible at what he does. He is a very good economist and brings a ton of strengths to our program. And then you have the other 9 area specialists. Now I say 9, I know there's or state specialists. They changed their title. I keep calling us area specialists. But there's 9 of us. We are coordinated. The managed coordinator is Kevin Ferguson. He covers 3 counties there in central Tennessee as well. He is a managed specialist as I am as well, but he also sort of oversees the statewide program. Then we have Logan Meeks, Alan Galloway, Tori Griffin, Aaron Bell, Lester Humple, myself, Ty Wolliver, and Dallas Manning across the state. And we all do one-on-one consultations with producers with different financial topics. Some of our programs that we offer across the state from time to time, of course, Farming Fundamentals, that's an online program as well as we do them in person as well. The managed program is the longest program we've had at the university, but that's the one I work with specifically on my day-to-day job. Master Farm Manager is another master's program to complement Master Beef, Master Row Crop, but it does focus in on farm finances, income taxes, dairy gauge, and farm transition and planning programs, or it's formerly called Farmland Legacy. And we'll go into detail on all these programs. So the first one I'll talk about in more detail is the managed program, the job I work with day to day. It was created in 1986. It's designed to help Tennessee farmers evaluate individual situation, analyze their total farming business, and make informed decisions. So a lot of times I'm dealing, with the specific farm finances. It is a confidential program that we work one-on-one with that producer. They don't have to share any information that we go over. A lot of times I'll work with farm deciding, let's just pick something simple. They decide they want to go from 50 beef cows to 100 beef cows. And we can run that in a simulation model and look at it and say, does this make financial sense before we spend the first dollar? So, to do any of that stuff, we got to decide where you are currently. So most of the time we'll look at the current farm situation, current farm finances before we look at making a future investment. But we can help you create balance sheets for your farm, income statements, and then do some farm projecting as well. So that then we also help with some record keeping systems, set up record keeping systems, simple budgeting analysis as well. Sometimes if it's an easy decision, or not an easy decision, but a simple change, a simple production budget may be enough to look at and evaluate an idea. Of course, the farm business planning, I just talked about that. We also do some tax education and look at different marketing options. A lot of times, what is the best way to sell my product? So if we look at the territories across the state, we'll start in West Tennessee. Logan Minks, he just started about, I think 2 weeks ago. So he's brand new and he's got the Delta area. Then Torrey Griffin is sort of that West Central Tennessee. Then Aaron Bell has around the Clarksville area. The Southern Middle Tennessee is Les Humple. Kevin Ferguson's in the center of the state. He's also the coordinator of the program. The lower East Central Tennessee is Dallas Manning. Alan Galloway is in the upper Cumberland area. I cover Southeast Tennessee to Scott County. Everybody knows Scott County's in Southeast Tennessee, but it's just sort of how the counties got drawn up. And then Northeast Tennessee is Ty Wolliver in Northeast Tennessee. So as you can see, we have representation across the state, and it allows us to get out and get on the farms. That's one thing I love about my job. One, I'm never doing the same thing 2 days in a row, which suits me very well. But two, we're out in the field working with producers. One thing I would put out there and a resource that is become available over the past few weeks that may help with some people. We had a lot of questions about business plans and stuff. So we did make some short publications on creating business plans. So if you're interested in looking at that, here is the publication numbers. I'd recommend Googling. A lot of times I think it's the easiest way to go about it. Just Google these, put UT extension, business plan description, put these numbers in, it'll pop right up. But they're just short pubs that sort of help you develop business plans. So one of the newer programs that we have going, we started about 2 years ago, is Farming Fundamentals, and it's a beginning farmer program. When it first started, it was all online, about 10 or 12 videos put together that you go through. But we now have agents offering farming fundamentals in person in the counties, which is really good. And we love that aspect of what we've been able to do. If there's one thing COVID allowed us to do, was sort of take a different viewpoint of how we're doing meetings. And we do a lot of webinars, but what the great thing is, we're seeing these webinars adapted back to in-person meetings, because it's very different talking to a camera like today. You sit here and, it takes some of that personal interaction out that you get at meetings. So we do offer these both ways, but Farming Fundamental is a self-guided or self-paced class. Basically, you sign up, you watch the videos throughout the process. It's focused on research specific towards beginning farmers with different topics. It's coordinated by Charlie Martinez and Aaron Bell. The program began in 2001, and it is pre-recorded, as we already said the most of it, and it will help you become eligible for 50% cost share through the TAEP Beginning Farmer Program. You can do that 2 different ways, through the Tennessee New Farmers Academy, which TSU puts on, or UT Farming Fundamentals. And if you are a beginning farmer and you're interested in a good in person, I do highly recommend the New Farmers Academy as well. I helped Jenny Goodrich with the one that's done in Morgan County here in East Tennessee. And it's a very good program. They meet once a month for about 8 or 9 months. So it's a lot more intensive, I would say, than farming fundamentals. I truly feel the two programs actually complement each other very well. So far, farming fundamentals has had over 500, 600 people completed if you take online and in person together. And 35% of them are new to extension, which is always good. I still get amazed at how many people don't know extension exists and don't understand the services that can be offered to them. So we've had them from California, Colorado, Hawaii, Pennsylvania, Illinois. You could see a lot of different experience levels in there, and acreage between breakdown. So you can see a lot of it is true beginning farmers there when you see, 57% of the people have less than a year's experience in agriculture. Here's some example modules you have. You have financial statements, income taxing, farming foundations. Farming foundation goes basically into, soils, nutrition, just some basic stuff. Farming fundamentals sort of brings in production and farm management together at the same time. So where Master Farm Manager focuses more solely on farm financials, farming fundamentals covers a lot of production issues, and it was sort of developed over different phone calls that we would all receive and our county agents would receive. And you'll always go out and sort of have, the first time you go visit somebody, answer just the same basic questions. So the thoughts on farming fundamentals is, help the producers and people when you come out to be able to ask better questions. And I think farming fundamentals really helps that come along. So the next program I'll speak about is Master Farm Manager. This one's near and dear to my heart. Right before COVID hit, I test piloted this program actually in Madisonville, Tennessee. Was the first time we'd ever done it. It wasn't even Master Farm Manager. I called it something else. I called it Farm Management University, something like that. But I had 23 people sign up for it. And when I knew I was on to something, 17 of the 23 people represented full-time farmers. And I don't know if we're in East Tennessee. You don't get that many full-time farmers in a room now because there's just not as many. But when that percentage of the producers were full-time farmers, it just made me feel like we were on to something, and hitting an area that was probably underserved from a financial management standpoint with this program. We do hold 2 statewide webinars annually. We do one in January and one in June. So it is offered online as well. The registration's $100. A lot of the master's programs, we just went with what everybody else was. But we do in-person and multi-counties offerings as well. This is an example of 2 that were offered this past year. This is one I did in Knoxville, and this is one Aaron Bell and Tori Marshall did in West Tennessee. But we cover financial statements, cost of borrowing, so a banking presentation, tax planning, equipment purchase decisions, sometimes simple things of insurance. Are you covered? Have an insurance agent come in and really talk about what needs to be covered, how it needs to be covered, why it needs to be covered from a liability standpoint. A lot of times I hear people, it comes up a lot, they go, well, I need an LLC because that'll cover my liability. Well, maybe. I had a dairy farmer that was going to start an LLC for his trucks that he hauls his milk with to Mayfields. And then he called his attorney and started talking to him. And the attorney said, well, do you ever drive the truck? And he says, well, yeah, when my driver's calling sick or something, I have to. He says, well, the LLC is really not going to protect you then, because if you get in a wreck and you're the driver and you own the farmland and everything, they can sue you and the LLC. So, sometimes the LLC is not protecting you what it is, and what he really needed is just more insurance coverage. Insurance was more important there than actually the formation of the LLC or the corporation. Building relationships with lenders, that's also important. And talking about, the importance of truly having a relationship and knowing your lender and not just going to get a loan, making sure they know what's going on, what's happening. Because, you get in a bind or something, you need to have somebody that can help you out. Management transitioning and farm transitioning, we cover that most of the time in all of them. And, just getting started with financing a business. Just some of the highlights. One thing that amazed me about we've had nearly 2,000 producers complete this class. Now, these aren't totally up to date at the moment, but it's getting close to 2,000 people across the state. 21% of them are new clients to Extension. That blew my mind a little bit. And I think some of that's the webinar aspect of having a meeting. But then, 38% of them now have completed balance sheets, which is a great thing. The first thing I want to do whenever I start working with a farm is say, hey, let's make a balance sheet. Because if I don't understand your financial makeup and situation of a farm, there's no way I can give you advice. And when I'm working with somebody, what I always tell them is, I'm not selling anything. I got nothing to sell. I want to give you the advice to make your business successful. I'm not selling a loan. I'm not selling anything. I want to give you the best advice I can to make your farm successful. So at this point, we'd had 1,500, but I know we are getting close to 2,000 participants over 3 years completed. Majority of them from the state of Tennessee. Vast majority. Another thing that we do and offer is farm tax information. Alan Galloway leads this area. I tell people all the time, I'm not a tax professional whatsoever. Just a little disclaimer, anything there. But, always remember with your tax records are important, and how do records affect taxes? They are very important. One, it helps the tax preparer to be more accurate with the return. It will reduce your return cost and tax preparation, because they're billing by the hour. When you look at it, that's how they're charging. Keeping good records throughout the year will reduce the time you spend on tax preparation. There's no doubt about that. But what it also does is it helps you be able to make decisions financially if you have those records. Keeping up with it reduces stress around tax time. And this is the key point down at the bottom here. Tax records should never just be for tax prep. If they are, you're not using your records correctly. They need to be there to help you make business decisions. So one thing to always think about, I always put this up there, if you do for some reason get audited, good records, you want proof of being able that you're motivated for profit. And one thing you can do there is having a business plan. It does not have to be a 100-page business plan. It can be a 5-page business plan or 2-page business plan with some goals that you have. Always keep separate records and accounts. That one's a big one. I've seen this for years, and that's one thing they always key in on. They don't have to be two separate business accounts, is what I tell people. Because you put business in front of it at a bank and they're going to start charging you for that checking account. Just open a separate personal checking account, but just keep everything in that checking account as a part of the farm, especially if you're set up an LLC or a corporation, you're going to have to open a business checking account. But if you're just a sole proprietor, there's no problem with just having two personal checking accounts, and this one is truly personal, and you run the farm business out of the other checking account. But what it does, it shows that it's a separate business. Nobody in the business world is going to use their personal credit card to buy everything, and a checking account. They're not going to intermingle those things. So that's the other thing I always tell. I'm a big proponent of having a credit card as well for the business. Take advantage of some of the rewards that are out there, but be sure at the end of the month those get paid off, because I think my credit card right now, I haven't looked at it in a while, but I think it's like 22% interest. I don't want to pay 22% interest, but if you pay it off at the end of the month, there's some good rewards programs out there that, hey, I know I've got plenty of farms that take the rewards at the end of the year, and they collect so many because some of them are making pretty major purchases on those credit cards. They go on a family vacations off of rewards off the credit card almost every year. So sometimes simple things like that can come great benefit, especially for the family. Continuing education, keep track of those things. All these certificates, anything that you attended, just put it down there. Show that you're trying and truly trying to get through, and you're looking to make your business as profitable as possible. And changes, improvements that you made on the farm. Why did you do these NRCS projects? Why did you do these different farm processes while you were and how did it build into achieving your goals for the farm? And the other thing that'll catch you every time is if you have a high off the farm income. They really like to look at people. I've figured out over the years, if you've got a construction business or another business and a farm. I'll never forget, I had an accountant one time that was getting audited by the IRS, and he just couldn't figure it out. So I helped an accountant get through an audit one time. Luckily, we got him pretty much through it, but he had some things that he had to, adjust there. But most of the time, you can get through the audits pretty well. But it's just a process you don't want to go through. And if you do some of these things, you're probably not going to get flagged. So the vast majority of people still don't get audited, but it does happen. So record keeping with that is very important. It makes you my main thing though is, it helps you make decisions. That's number one. That's why you should keep record. But having a good record keeping system gives you a way to have accurate records, which is very important. And create true financial statements where you can evaluate that business. And knowing what you have, it lets you see where you're going. I've got a stalker producer that I work with quite often, and he told me one time, he said, David, he said, I don't go out the door on Friday morning unless I have my Quicken up to date. And I sit there and look at my Quicken reports. And if you think about the stalker business in general, you're purchasing a lot of animals during the week, you're selling animals there's a lot of money going in and out. But that gives him the ability to make good decisions the next week because he knows his current financial situation very well. So I depending on your business size and the amount of transactions you have, I highly, highly recommend, that you sit down at least once a month and update all your financials. But if you're doing a lot of invoices and a lot of transactions, at least do it once a week and just do a set time. His was 5:30 a.m. on a Friday morning. That's not the time I would choose, but that's the time that worked for him. And every Friday morning he would do it, and he makes incredible financial decisions because of that. Because you can't make good decisions if you don't know what you're deciding. It gives you ability to know your strengths and weaknesses. And having these financial records, you can use that for any applications, loans, those different things that you got to go through. So there's two types of records that I would tell anybody to keep. First is your financial records and your production records. This is sort of a dairy webinar, but I know a lot of people in here that aren't dairy farms, and there's a lot of different type of records that you should keep. You can't just keep financial records because that won't let you make decisions. The power is when you have the financial records and the production records, and you can see how those interact. So I always give an example of production records. If you look at vegetables and selling vegetables, let's say you have 2 acres of vegetables out there, and you're looking at your crop plan for the next year. Well, if all you have is financial records, you can say, I brought this many dollars in and that many, but that doesn't really tell you anything because you don't know how many square feet or how much space each crop took up. So you don't know sort of the returns per square foot or returns per acre, however you want to calculate it. You also don't know the loss. What I always tell people to do especially in the vegetable sides of things is however you're harvesting these vegetables, if it's a 5-gallon bucket, whatever it is, take that 5-gallon bucket and weigh it about 3 or 4 times at the beginning of the season and get an average, say it weighs 28 pounds. And then when you're actually in true peak production, you go out and you picked five buckets, that day. You just write down 5, then you multiply it by 28, and that's the weight you harvested. And the power of it is, your harvested weight, and then you look at what your sales weight was. How much did you waste? How much of product was just not used or not sold? So then that sort of tells you, did you meet your demand, or do you have too much supply? And then the next year you'll be able to make a decision on, how much acreage or space you should allocate towards that crop or that commodity. There's a lot of different financial records, income and expenses. You've got to keep up with that for taxes. There's a lot of different methods for doing that. We'll look at a couple of these accounting programs out there. Accounts receivable, who owes you money? Accounts payable, who do you owe money to? Balance sheet, income statement, enterprise budgets, and then cash flow can be very important depending on the enterprise you're in. I know when we sold out the dairy cows in 2003, it was a big adjustment from going from dairy farming to mainly beef farming, because when we went to beef, cow-calf operation, you get 2 paychecks a year. We were used to 2 a month, so it's a lot different financial situation, and it's a lot different setup from, we need an operating loan. We'd never had an operating loan in the course of our business. But when we went to beef cattle, we had to have one because you only have 1 paycheck coming in a year. Production records, a lot of different things there. Look at some desired quantity inputs, production measures, inventories, time data. How much time are you spending on these commodities? So you can really know what your labor costs are. If you think about, you have blueberries or something like that, there's a lot of time that goes into that stuff. You've got to build that into your cost of production. Input usage, then of course general production records, death loss, preg rates, cull cows, milk production, treatments. That's more, some of that's more dairy specific. And then crop yields as well. Fertilizer, seeding rates, all those things. Just there's a lot of different things there. No reason to go through all that. For production records, we've talked a lot about this. It helps you be more efficient in your production. You've got this slide. I'm not going to go through all that, but you're looking at being efficient. If you could take anything away from today's presentation, look at your farm and decide, how can I be the most efficient with my farming operation? Maybe not the highest yield, but the most efficient. Increase that margin if you can. Sometimes the highest yield is not the most profitable. We have a lot of fun with some contests and stuff. Think about national corn growers, who can grow 400 bushel corn per acre. Just some fun stuff. It's really fun to do, and it's fun to do on 3 or 4 acres, but is it efficient? No, most of the time it's not, and it's cost prohibitive. Sometimes it costs us more to get to that yield than the yield's worse. So, but it's a fun contest. So there's a lot of things to think about there when you're thinking about your farming operation, but try to be efficient in your production. We've talked about most of that. When we look at record keeping methods, you've got some different computer software. You've got Quicken, Excel's another great one. QuickBooks is great. I get the question a lot most of the time, should I use Quicken or QuickBooks? And here's my simple answer. What I tell you, most of the time, if you talk to an accountant or somebody like that, they're always going to recommend QuickBooks. But if you're running a simple, cow-calf operation, or even a dairy, I've got plenty of dairies that Quicken works fine with, because all you need to track is your income and expenses. If you're doing a lot of invoicing and you're needing to track all that, and you're also doing payroll, QuickBooks is really something to look into. That is where, it really excels. But, if you're just tracking income and expense data for financial data, Quicken works really well, Quicken Deluxe. There's some other ones out there as well too. I don't know those as well. A lot of people really, QuickBooks and Quicken are for small businesses, as you all know, have really taken over the marketplace. I love Excel a lot of time for production records. A lot of times production records can be difficult, especially when you get outside of traditional agriculture. I get asked, what's the best program? You get outside of, cow-calf operations, row crop operations, different things. A lot of these farm record keeping programs for production really struggle because every farm is so different. Sometimes just setting up a basic spreadsheet to track that information, that production data, is by far the best route to go. And I've helped a lot of people over the years do that, and they've been pretty successful utilizing a spreadsheet. Because the great thing is you can just have that workbook, name it 2003. When 2004 rolls around, just copy the workbook and you're ready to go with a blank workbook. There's some phone apps out there too. A lot of these programs come with the software where they connect to your phone as well. Pad and pen still works. Farm Bureau's got a great record keeping book. If you hate computers, that it does a fine job. It breaks it down by the Schedule F, and it's a really good book. But you also have the console of your truck where you throw all your receipts and stuff, or up in the mirror, and then the sun gets in your eyes and you throw it down and it all goes flying. I don't know if y'all have ever had that happen, but you stuff everything up there and you're like, gosh, sunny, and then it hits you in the face. That's happened once or twice in my life. So, when you think about record keeping, it is important. Keep the records you're going to use, though. Don't try to keep more than you need, and keep the records that work for you. So I do have some stuff in here on dairy as well. It started as a dairy webinar. Dairy Gauge is a program I work with. It's another one of my dream childs. It's actually a spreadsheet that I put together, and it helps break down financials for dairy farms. It's pretty simple to use for any of the dairy farmers that are on here. It's basic income and expense, annual milk marketing statement, end of the year, most current balance sheet, and average number of lactating cows and dry cows. With that simple information, we can have a very good look at a farming operation. But this is a basic breakdown of the spreadsheet. It gives you the blue cells and the purple cells are the cells we put our information into. This is just a fake example. You fill out these and all this other is calculated, but it looks at it as a total farm, a per cow, per hundredweight, a percentage of milk, and then a percentage of gross. What I always like to point out is the importance of the other sources of income on a dairy farm. You can see here, this is 106%. If we look at our cost structure on milk, but then if you bring in the other incomes such as calf and heifers, cull income, dividends, it gets it down to 93%. So there's some wiggle room there. The other thing we do is a forage cost. We try to come up with how much forages are costing us. So we do that basically by taking, if we look on the previous slide, these total expenses, what we're doing is taking percentages of those total expenses that went towards forage production, because what we want to do is get to a per hundredweight cost of forage. So you can see we basically just take some of the categories out of the total farm there and give them a percentage to create a customized cost structure for that farm. Then we create a simple balance sheet. It's a very simple balance sheet. It just takes the total, and you don't even have to have intermediate and current long-term assets broke out or debt. We can put that in one. But in this case, the exact example, I broke it all out, and then we get land values as well. And so we can calculate some of the basic financial standards that we'd look at. Each farm receives a report. This report here gives them sort of their simple balance sheet we looked at, but it looks at their debt per cow. You think of it, our standard is we'd like to be less than $5,000 a cow in debt. If they're expanding, they may be a little higher than that. But in this case, their debt per cow is $5,200. So then it says they need to watch it, and it's going to tell them if it needs to be watched, investigate, or you're great. One thing I always like to do is do non-land debt per cow. And the reason is the value of land, especially in East and Middle Tennessee, is just it, and it is anywhere. West Tennessee, it is now. You got Blue Oval going in. Land values in the whole state of Tennessee are just tremendous. So when you start looking at some of these dairies that have been in operation for 100 years, and their land values are $45,000 an acre. When we look at investment per cow, and we're taking the whole balance sheet, $13,000 a cow, want to be less than 15. I've seen this in upward of $25,000 investment per cow. And it goes back to you, but you pull land out and you see what the true dairy investment, not counting land, it takes this example from 13,000 down to 6,000. So it's just a way to evaluate it, because a lot of these dairies are dairying, they want a dairy, and they're not the factor of the land being worth more as a subdivision. That doesn't matter to them because they want to farm. So I always want to look at it in those situations, but you can see all the different financial ratios it calculates, and then it goes into feed cost per hundred and some of those things. It also, some of us, we like pictures. I like pictures. It calculates all these different ratios and sort of breaks it down on on a red light, green, yellow, red. So it just sort of gives a scorecard. Just looking at some 2022 numbers, you can see the production. This is what I've collected so far from 10 dairies here in East Tennessee. I've not got out to the other parts of the state yet, but so far I've collected 48% of the milk production in the state of Tennessee when compared compared to the total pounds produced in the state. Just looking at the cost structure on a per hundredweight basis, one thing you got to point out is how great of a milk price we had last year. Dairy farms in the whole U.S. got some great relief with a strong price last year. But then we look at the cost structure, and I've got some of these highlighted in orange because they had a vast jump from previous years. Feed costs per hundredweight increased by almost $2. That's a 16% increase in price. You had the same with chemicals, fertilizer. I'm sure any of you all in other agriculture industries felt those effects as well. But if you look at total farm cash expense up to $24, whereas last year, when I look at 2001 versus 2002, we were at $21.74. So that's a $3 per hundredweight increase in production cost from 21 to 22. And most of that goes back to those orange categories. But when we look at some of the financial ratios, we can see that farms got stronger. These are the same farms in both data sets. I went back the other day and made sure that they were the exact same farms. And if we look at this data set, debt per cow decreased. Total land investment that increased, but that's total investment. Sometimes that's a good thing, and a lot of times that was land values going up. But they have real strong current ratio, asset ratio went really good there for we really turned over assets. And one that made me really happy to see is operating profit margin here. We want to see an operating profit margin of almost 25%. That means these farms are being able to make money and sustain. And we really got that last year. And the dairy industry really benefited last year. Income per cow went up to almost $8,000 a cow. And a lot of that, of course, is towards that strong milk price. Labor costs decreased. A lot of that is because the price of milk increased. So, we always want to stay under 15%, but you can see how much of a strong background. One thing we haven't seen yet is because not many are refinancing during this period, but the interest expense ratio is still relatively low. But I think as we see new loans coming on, new things, we're going to see this number pop up. And this interest expense ratio is going to become important over the next 5 to 6 years in agriculture in general. Feed costs. Look at the difference in feed costs that we had, even forage production, because of those input costs that went up. But total feed costs went from $12.50 to $15 a hundredweight. So for every 100 pounds of milk, it was costing the dairy farm $15 to produce it, or 54% of his milk check, and where it was 62 from previous years. If you want to know more information about Dairy Gauge, I always tell people just Google it, utdairygauge.com. We've got a lot of reports. The new report should be coming up, should be updated. You can learn a lot more about the Dairy Gauge program on the website. There's other resources available. There's publications on how to understand each of the ratios. It breaks it down for each individual ratios. I know you all don't want me to sit here and go through all those today, but there's the fact sheets that are available. We also, just a quick moment, and then I'll turn it back over, is doing farm transition planning, succession planning. We have some meetings across the state, focusing on estate planning, tax planning, business planning, retirement planning, and how to transfer that land to the next generation. Those come on and off every now and then, and we do have some resources available. If you'll just go to the Farmland Legacy website, you can download this whole manual on farm estate transition planning. Or if you have any questions, contact one of your area specialists or contact me and I'll get you in touch with the correct person. With that, here's my contact information. I appreciate you all for your time today.
Awesome. Thanks so much, David, for that. And guys, I'm going to go ahead and share the attendance survey. If some of you are on here for TAEP credit, it's a QR code. And I also put the link to the survey in the chat. And so be on the lookout for an email from me later on today. Once this recording gets up on YouTube, I'll get that link out to you guys. And I will share this attendance survey link one more time in that email as well. Our next session will be July the 11th. It's going to be over Adobe Express. I don't know if you guys are familiar with that or not, but Mr. David Yates from UT Extension is going to be talking on that. So be on the lookout for our session next month. And thank you guys for being a part of this today.